Hello traders, this is Rich from tradesight. I want to take a couple of minutes here and take a look at what's shaping up with the ES futures as far as the Comer tool goes. The Comer is our tool our proprietary tool that we use to track key inflection points in the market, and also just to kind of give us a roadmap of overall market construction. ES futures did record a sell signal here at range high on this push in the futures. Note that we've had three signals here in about the last year and a half. Here's one signal. What that did was force this little bit of corrective activity to the downside, but really made the market go sideways. Then we use the risk line here as a breakout to the next run to the upside. We got another one here at the end of last year, and what that did was just kind of held the market back and more or less made it go sideways, essentially until the second half of December, where we had this last wave to the upside. Right now, we've generated a wave to the upside here. We've had somewhat of a reaction to the downside already, but I think what we need to be on top of is this is one thing that we always teach at tradesight, is that if you're seeing something in one time frame, it's always prudent to look one time frame up. We're working the daily time frame right now, so what we want to do is take a look and see what the construction looks like in the next time frame up, which would be the weekly chart in this case. So let me change the chart here to the weekly time frame. All right, now we're up to the weekly time frame. We did get a signal in the weekly time frame, kind of in the middle of last year. What that really did was just kind of arrest the ascent to the upside here. It did force this this downside break that was very minor, and then it also acted as a key resistance level and a breakout here for the run that currently resides with our high water mark being our 13 exhaustion signal right now. So this in the weekly time frame right now. The high weekly close is a 13 exhaustion candle. So this is very notable. We also want to make sure that we're aware of where the risk level is, which is 1946 right now. So that's also going to be a level that's going to come into play if we can kind of circle the wagons here and move back to the upside. But for now, there's really been no reaction to the downside. We have this little piping action, or king and queen, if you will. We have this big up candle followed by strong and more or less equal down candle after that. This week, we're going to wind up settling pretty weakly, since we're going to be in the lower half of the trading range. They really stuffed the market today, which is Friday, and they're really pushing things down. So this is definitely going to be a cause for concern. And what you want to do is you want to watch the lows of the last 2 weeks. So if we take out the lows from the last 2 weeks, especially on the closing basis, that's going to be a notable development, especially since we've got a 13 exhaustion in place on the Comer from this time frame. Now, while we do like the Comer, I always want to know what the sister study is doing. That's the Seeker. So let's take a look at the Seeker and see what that has to tell us now. All right, so here's the sister study. This is the Seeker. We're back to the daily time frame. You can see that we've identified an impulse to the upside here with the startup phase. Those are the 1 through 9 green candles, but the exhaustion phase has only gotten as far as 9 bars up of the required 13 for an exhaustion warning. So we still need a few more bars here to print to the upside before we're going to get that warning in the Seeker study. Now remember, when the Seeker and the Comer are both in an exhaustion state, that's when you can have some really powerful moves. So this is definitely something that's worth staying on top of for that, to fine-tune your entry. Now here's a look at the same chart. This is the ES futures again with the Seeker study, but this time we're up into the weekly time frame. We've got a couple of signals here. This one was more or less ignored by the market, except for we set this risk level, and this risk level was in play for many weeks and was obviously the pivot here for this exhaustion run. So while the signal didn't produce a downside, it did give us a very useful level here that the market used for a number of weeks. And we got this signal here in August, which was the August high. Good signal here because the subsequent action for most of August, this came in late July, was really to the downside. And then again, the risk level held in check the market here on this retest. We actually breached exceeded the old high, but the real breakout wasn't until we got above that risk level. So they're very important. looking ahead to moving on to the price action now, we're 12 bars up and only one
Guys, that's
candle
it for
away from
me.
getting
Go
an exhaustion
Wildcats.
signal.
And
So once we do print that 13, this is going to be an important technical development. It's going to lock in that construction on the chart and also give us the risk level to work with. So it's very possible that we've been up week. Next week we're going to wind up recording that 13 exhaustion in the weekly ES futures on the secret count, and that would be a confirmation of the weekly signal that we already have in place on the Comer. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.